And so we end up with a currency that's not really working anymore in the sense that its value is falling dramatically and people don't want to use it anymore, or they want to use it to buy real stuff, which then goes through the roof. And then, once the currency has kind of been given up on, the government has to do something like, look around in Latin America and see what they do. They lop a few zeros off the currency and then reintroduce it or something like that. We will have that kind of a currency reset, which Jim Rickards has been talking about. And then the question is, what is the next, dollar system out there or across the world? What's the next kind of global monetary system after the fiat currency system fails? And I think there's a decent chance that there's some kind of a gold standard.
Nearly all currencies are debasing by increasing supply at a rapid rate. This is why gold decouples from the relationship between the dollar and other major currencies. It is not about the dollar versus the euro or yen. Instead, nearly all fiat currencies are debasing versus gold. Gold's value saw pivotal shifts after significant global events. In 1971, the abandonment of the Bretton Woods system allowed gold prices to float freely, pushing its price from $43.15 per ounce to previously unimaginable levels. Prominent market expert John Rubino discusses the consequences of the fiat currency system introduced in 1971, which he argues has led to excessive debt and increasingly severe economic cycles. Rubino predicts that simultaneous financial bubbles like real estate could overwhelm governments. Massive bailouts may trigger inflation, eroding trust in the dollar and accelerating its collapse. Inflation has already eaten away 90% of the dollar's purchasing power since the 1970s. Every dollar printed to fund government spending dilutes the value of those already in circulation. In his assessment, Rubino suggests that such a crisis might force a currency reset, potentially returning to a gold standard, as governments face limited options like hyperinflation, depression, or revolution. From an investment standpoint, he advises focusing on commodities, as they will likely outperform during declining currency value. Although we are no longer on a gold standard, gold continues to be viewed as a stable currency because it is naturally scarce. It cannot be willed into existence the way central banks can easily manufacture fiat currencies. Gold has gained almost 30% this year, and there are widespread expectations for fresh records in 2025. Goldman Sachs Group Incorporated and UBS Group AG both issued bullish outlooks in recent days. Now we present the clips of John Rubino's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Since we started the fiat currency experiment in 1971, which basically gave unlimited credit cards to the world's governments, we've been taking on more and more debt. The amplitude of the boom and bust cycle has gotten bigger and bigger until we reached the current point where we've got a whole bunch of bubbles out there all at once, not just tech stocks, not just junk bonds, not just subprime housing, but a lot of bubbles. And they're all going to burst. And the resulting bust is going to be more than most governments can handle because they're going to step in. Let's say the U.S. has a commercial real estate bust that morphs into a local and regional bank crisis. Okay, that's one subset of things that could go wrong. The federal government steps in to bail everybody out. With another $2 or $3 or $4 trillion, the world, or at least Americans who have already experienced high inflation in very recent living memory, don't take that well at all. And they start front running the government. The dollar starts to crash. You get kind of the Austrian School of Economics crack-up boom, which is a time when people just lose faith in the currency. And they buy real stuff with that currency immediately. That causes inflation in the real stuff sector. And the currency just kind of collapses. So, stripping out all the other stuff that would be happening at the same time, that's kind of what would happen for us here. And so we end up with a currency that's not really working anymore in the sense that its value is falling dramatically and people don't want to use it anymore, or they want to use it to buy real stuff, which then goes through the roof. And then, once the currency has kind of been given up on, the government has to do something like, look around in Latin America and see what they do. They lop a few zeros off the currency and then reintroduce it or something like that. We will have that kind of a currency reset, which Jim Rickards has been talking about for quite a while. His books are really good guides to the details of something like this. And then the question is, what is the next dollar system out there or across the world? What's the next kind of global monetary system after the fiat currency system fails? And I think there's a decent chance that there's some kind of a gold standard. So, okay, within that crisis, there's an investment thesis. You want to front run the tsunami of capital that's going to flow into real stuff. So own commodities mostly because, if the economy doesn't collapse. Oh, by the way, this will also bring with it an equities bear market, at least at first, because a banking crisis would knock stocks down. And then the government would step in and bail out the banks, but also the equity markets as this goes on. So we might have the spectacle of the dollar collapsing while the NASDAQ goes up, okay, but it probably won't go up as much as the dollar goes down. So you still lose in real terms. So anyhow, the government then finds that it's got a list of options, and all those options are horrendous. You got a French Revolution, you got a Weimar Germany style hyperinflation, you've got a 1930s style depression, and you've got a currency reset in which you go back to, say, the gold standard and give up the power to create money out of thin air. So no government wants to give up the power to create money out of thin air if it doesn't have to, but looking at its other options, maybe, a gold standard is the worst option or the best option on a very bad list. And so that's what they choose.
While John Rubino acknowledges Bitcoin's potential, he admits he lacks the technical expertise to endorse it as a foundational monetary system fully. However, he emphasizes the enduring value of gold, citing historical precedents and recent central bank purchases as evidence of its importance in future monetary systems. Experts predict that its historical significance and rarity will maintain its worth. Its dependability as an investment is further supported by short-term trends, showing increasing demand and consistent price increases. The gold price in 2025 will inherit many of the drivers seen in recent years, but with the price rising unexpectedly in 2024, there are new factors to consider as well, particularly from Asia. The strength of the dollar, inflation, and interest rates, combined with the U.S. election, will make America a particularly big driver for the gold price in 2025. Based on economic trends, Rubino advises individuals to own physical gold and silver as a reliable hedge, asserting that physical money will always retain value in specific scenarios. Let's get back to the interview.
Trump is such an opportunistic guy that it's hard to know if something he said during a campaign is going to translate into serious long-term public policy. So we don't know for sure about what the whole crypto thing is because, cryptos, if they succeed, or at least Bitcoin, if it succeeds, becomes a threat to the big fiat currencies. And it's not clear how governments are going to respond to that because if we went to a crypto standard, that basically means we're throwing the dollar out the window and replacing it with Bitcoin. And a lot of people who derive power from the dollar being the world's reserve currency and the legal tender in the U.S. aren't going to like that. So it won't be something that's a smooth trip from here to there. But at the same time, there are a lot of instances of Bitcoin becoming accepted kind of organically out there. The government of El Salvador names it legal tender, or a given company starts accepting Bitcoin in payment along with dollars. And if things like that kind of happen piecemeal out there, then eventually you get a critical mass of the economy that will accept Bitcoin, and it becomes part of the equation. Then you get to the physical versus virtual debate. Like, for instance, let's say you and I we're in Phoenix or someplace, and the shit has hit the fan, and we need to get out of town, and both of us show up at a used car dealer at the same time, and he's got one car left. And I pull out a handful of Krugerrands, and you offer him the key to a Bitcoin account that and I'm sorry, the internet is down in this scenario. Okay, we've had a blackout or whatever, an EMP attack, or whatever, but we just can't get to anything online. So I offer him gold for that used car. You offer him a much larger amount of Bitcoin if he trusts you. And what's he going to do? And more than likely, he'll take the gold, right? Because you can't guarantee and you can't prove that you've got this Bitcoin. And so that's kind of an illustration of the debate between physical and virtual assets, that there are times when physical is necessary. And there are times when virtual, let's say you and I are trying to get to Switzerland from the US, and I'm gonna fly with a handful of, or a pocket full of Krugerrands, and you're going to have a little thumb drive with much more Bitcoin there. You could just send that Bitcoin to Switzerland instantly with a mouse click, and then you don't have to worry about border guards or anything like that. And I do if I've got gold. So It's going to be an interesting debate over which form of money is superior and under what circumstances. And I think Bitcoin is part of that debate. And I don't have the technical chops to really weigh in and say, well, Bitcoin is superior because this, and this. And I feel like I can say that about gold. You know, gold is historically the world's money. Central banks are just buying the hell out of it right now. And in which is evidence that they're preparing for the potential of a gold standard going forward. You know, and so I can say that with certainty because it's understandable and it's happening, but I can't make the Bitcoin case as thoroughly because I'm not technically as sophisticated when it comes to cryptos. But you know, somebody like Mark Jeftovic, you could have him come on and he could give you the Bitcoin side of the story about why Bitcoin is going to be the monetary base layer of the global economy going forward. And it would be a really interesting talk, but I can't do that, you know? And I think there's always going to be a place for physical money, which is why I'm very comfortable saying, yeah, own a lot of gold and silver coins and bars and, you know, diversify where you put them all, but make sure they're physical. I think that's good advice because I think physical money will never go out of style because there's always a place for physical assets.
As a pure financial asset, gold tends to move first as it reacts most immediately to the debasement of fiat currencies. But, over time, debasement is inflationary and should be reflected in rising prices of industrial commodities. Experts predict a long-term upward trend for gold prices, with values potentially reaching $4,000 to $5,000 per ounce by 2030. What are your thoughts on the enduring role of gold in a rapidly evolving financial system, and do you see physical assets as better safeguards for the future? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.